Good morning, guys. So Dan from Trading with Dan here. So this morning we're gonna have a look at the Bitcoin DMT and Dominator indicators, see what they are telling us. So 50-minute DMT, you can see it managed to wick us into a long trade, where basically about this level here. So that did actually, obviously if you had your risk management in place, that would have actually got you into a profit, then stops you out in a profit, because it did go up from the point of purchase. It went up about 8%. So if you had your trailing take profits in there, which you would have done if you had the bot turned on, which I would have done if I had the bot turned on, that would have taken a good profit. And then similarly with this sell, DMT sell we had down here, came down about nearly 8%. Again, that retraced, but again that would have locked in your trading take profits. So whilst I don't have those operational at the moment due to the volatility of the markets, both those trades, due to the volatility of the market, would have netted you a very large percentage gain. Similarly with the 25-minute Dominator, we had a buy trade around here, around this level, and that obviously spiked up to about 12%, 12.5% of on side. And then we had the Dominator sell trade, which would have been, we'll zoom this in a bit, get the right candle. Yeah, so it would have been around here. So that would have taken you to 10% off on side. So basically the DMT and the Dominator, both the bots then, if I had just left them up and running as I should do normally, they both would have just had two massive winning trades. So that is great. It's great to see that there. I know I didn't have the trades on, but that is fair enough. In hindsight, it is fair enough. I didn't want to take the risk with how the markets are moving at the moment. So yeah, so if you also if you have a look over the Ethereum chart, I mean the Ethereum chart will be pretty similar, probably just greater extremes of movement. So 50-minute DMT, you can see took us in a buy basically on this candle, which then subsequently went about 4% on side, and then we got a DMT sell here, which initially came 6% on side. You wouldn't have carried it through that to get back to down there, but that would have been the initial move. And then the 25-minute Dominator for Ethereum, if this is going to load, it's taking its time. Yeah, the buy trade perfectly called the spike, so would have got you long on this candle there, which is incredible really. Think about it, got you long there straight before we had a spike of 11%, and then got you short here before, well obviously after that dump there, but got you short before a spike of about 6%. So if you use the DMT for Ethereum and Bitcoin, for Dominator and for Dominator as well, you would have just had some ridiculously large gains there. So that is good to see. Whilst again I didn't have I didn't have the bot switched on. I did tell you I was looking to switch them back on, so it's kind of unfortunate way that I didn't. But hey, I'm choosing not to take the risk in those bots at the moment. Yeah, I have been working short positions obviously, because you guys have, especially know how bearish I was when we had the Fed rate cut. So it was a no-brainer to me. Bitcoin was gonna sell down from there. Especially with stops absolutely cratering. So yeah, we've got this. We're sort of getting to a head now this week with the actual underlying fabric of the financial system. The risk parity trade is basically blowing out. There's ETF redemptions, some oil ETFs blowing up. The vol is on the increase. None of this bodes well. I don't know if you guys, how many of you guys listen to my video on volatility and why it usually leads to lower prices. We were noticing obviously more volatility in gold and silver than we had been getting, and that has subsequently led to lower prices, because again, people, investors and traders can't necessarily hold on to positions whilst the price of the underlying asset is going all over the place. There is so I mean that just obviously reflect in the paper prices, but there is a large premium on actual physical gold and silver now, especially silver, where to actually buy, like say 1 ounce silver coins or silver bars, you pay quite a considerable amount over the spot price, which again is another indicator that the financial markets basically are the fabric of them is decaying fast at the moment. Because I mean, if the price on the spot is getting so far away from the actual physical value, it shows that there's obviously other aspects in play with the spot prices that aren't necessarily in play with the actual supply and demand for the actual underlying asset. So that shows you that there's obviously a flow of money that are in these that obviously is totally separate to the flow of money that's in and out of the actual physical asset, which basically just it shows as a malfunction in the financial system in that small aspect of it as well. So yeah, so I'm expecting fireworks this week anyway. I think this is the week where we're going to get a lot of we may even find a temporary short-term low in the market this week, just based on how dire this week could potentially be. Then we could get like a sort of a short to medium term dead cat bounce in financial markets as the Fed opens the spigots, it's opening their currency swaps with the central banks. It's basically doing everything it can. It's throwing the kitchen sink at repo. It's looking at buying corporate debt and also even looking at buying shares. But I mean, the shares going down is not just because people are selling shares. It's because there is a problem in basically the underlying sort of the debt markets that are linked to these shares, the corporate debt markets, that are then causing people to dump these assets. It's not just people taking a position on the market thinking we're going to go down, so we're going to sell these. There are bigger issues at play under the surface of those equity markets. Oil, like I was saying last week, is trading under $29. I mean, that was an obvious move that we spoke about last week. So yeah, other than that, I'll probably have another few videos today on various aspects of the financial market and what's playing out at the moment. So yeah, please smash the likes if you appreciate the content that I'm creating for you guys. Again, I'm extremely thankful to get past 100 subscribers, so hopefully that can push on over the next few weeks and months of me carrying on producing this content daily for you guys. So yeah, remember, this is not financial advice. I'm not a financial advisor. I'll probably be telling you all sorts of different things, basically lying to you if I was a financial advisor, but I'm not. So read into that what you will. Maybe you're going to get more honesty from me than you are from your financial advisor that's telling you just to buy the dip. But anyway, so yeah, thanks for listening, guys. Everybody take care again out there in these markets, because they're going to get even more wild now, I think, than the even wild nature that we had. Swings all over the shop. So yeah, be careful, guys, and I will be back with another video soon.